Good morning to all traders and welcome to this Thursday's FX Majors Market Insights video provided to you by Forex. Today is the 28th of August, 29th of August, excuse me. We've had an interesting session yesterday. Pound plummeted 1% following Bojo or Boris Johnson's request to the Queen to block Parliament or suspend Parliament for 5 weeks. And that will be during, of course, the date, the 31st of October, that the UK is expected to leave the UK, either with a deal or without. Obviously, that really caused a big turmoil to the markets. The cable moved like 1% lower. After markets started realizing that this may indeed be a tactic to get the European Union to cave in, they started buying the pound, managing to reduce the losses down to 0.5%, to like 0.5% until the day is closed. Now, the pound is, of course, under pressure as we speak, and this is because this latest move and the acceptance by the Queen is going probably to have a lot of leaders from different opponents and other parties consider quitting the government. Now, on the other pair I want to talk about is the dollar card, and this is because oil has been actually moving higher, but the dollar card is not following. The Canadian dollar is lagging, and this is because of trade war uncertainty. Oil moved higher because of both API and EIA delivered very, very good results after the best actually in the past 5 weeks. So before we go ahead on the technicals, let's see today what we expect on the economic calendar. We'll have the French GDP quarter-on-quarter, minor unemployment change from Germany and PPI from Italy, the Euro area consumer confidence index, then of course the German CPI. And the highlight for the day is the quarter-on-quarter GDP from the US. And a little bit of a less impactful event is the pending home sales from the US. Again, I want to start, of course, with cable. It moves exactly as we expected. We said on Tuesday that we wanted to see an ABC correction here. Wave B seems to be completed. Now we expect a 3-wave move to complete wave B, and then, of course, then wave C. Now, this could end out, of course, being just a simple correction, and that would be the end of wave 5. So that would mean that wave 5 is going to come a little bit lower down here. Okay, so that could turn out an ABC, and then we can have another move. So that would make 3, 4, and 5. Now, if that happened, we'll see prices breaking below 119.96 and probably heading down to 188.36, which is the second golden extension of this first wave. Okay, if we go anywhere between, we need to measure this extension and see whether this extension down, this break below that level makes the 38.2 extension of this wave. If that would be the case, then we are looking at an ABC here for an expanded flat. Okay, now in case this is not an expanded flat, and in case prices don't break below that level, we're still looking at this being either a running flat or a normal flat, which is likely to be something like that. Okay, so it really depends what prices stop. If they stop here, we're looking at a very good correction, WXY here, and prices would remain above this ascending trend line. If that happened, then we'll probably look at this turning as a running flat. So we're looking at start selling around 123.82 or maximum 125. Okay, that was still the case. That is a very good activity level anyway. Okay, the 125, and also psychological is also well supported by the RSI as we speak. So this sort of angle, though, gives me the impression that we are going to see a correction down to around 120, 160 or so, which is also the 50 bonus extension of this latest move to the upside. Now, on dollar card is also moving exactly as we expected. We are A, B, and we're expecting wave C to go down in the longer term. Now we can see this as 1, 2, and then of course 3, 4, and 5, with the chances of 2 moving down here very possible. So we could have this being wave 1 and this being wave 2 down here. Okay, so we can still see prices moving lower, regardless of whether this is a 1, 2, 3, 4, 5, or simply a correction, which would be an ABC as it is marked here. Now, at the same time, we can also see this ABC becoming 1, 2, 3, 4, 5. So that would be that. So this would be 1, this would be 2, this would be 3 down here, I guess, then 4 and 5. With obviously this becoming a bit more complex, wave 4 and 5. That is still the case. Whatever the pattern will be, we are looking quite bearish on the RSI, okay? And for that reason, I believe we are really going to move to towards the 130 and then maybe even 126. How I see this happening though, I'm still expecting another move to the upside. And this is because after this move down to 130.16, we've had an impulsive move and we're waiting for wave 5 to complete. We had wave 3, we could have a truncated 5 over here and then prices move lower, but because I'm seeing this divergent signal here, I expect this to have a throwback and then start moving lower. This ascending triangle pattern, of course, A, B, C, D, E, gives us the chances to have a rejection over here, then move down for wave E, then start seeing some last move to the upside where the 134, 134.50 or so creates a rejection and then start moving lower. So this is all for the day. I hope that was helpful for you for both pound and USDCAD. If, of course, you keep an eye on our blog, we'll be able to get into some opportunities sooner than expected. Is where we cover the latest headlines, news, we provide trading ideas and also other necessary tools traders need.